The cryptocurrency market is on edge. Today, the Consumer Price Index or CPI data will be released. This data is crucial. It shows the rate of inflation in the United States. Traders are watching closely. The CPI could make or break the market. The CPI impacts more than just prices. It influences the Federal Reserve's decisions on interest rates. Higher inflation often leads to higher interest rates. This can slow down the economy. Investors are worried about stagflation. This scenario combines high inflation with slow economic growth. It's a dangerous mix for markets. The hours before a CPI release are tense. Today is no different. Crypto traders are feeling the pressure. Many are hesitant to make big moves. They remember past CPI surprises. Some were positive, leading to rallies. Others were negative, triggering sell-offs. The cautious sentiment is visible. Trading volume is down. Volatility is low. This suggests traders are waiting for direction. The CPI data will provide that direction. It will either confirm their fears or ignite a relief rally. XRP, a prominent cryptocurrency, has been on a tear. It recently broke through a key resistance level. This technical breakout triggered a surge in buying. XRP is up over 18% since crossing above its 13-day and 48-day exponential moving averages, or EMAs. However, the rally has stalled. Red candles are forming on the price chart. This suggests some traders are taking profits. They are selling into the rally. Are they right to be cautious? Or is this a temporary pullback before XRP makes another move higher? The CPI data could provide the answer. The wait is over. The CPI data is out. The numbers are in. The CPI rose 2.6% year over year, slightly higher than the expected 2.4% increase. This is significant. The higher than expected CPI confirms the inflationary pressures in the economy. It also raises concerns about stagflation. The Federal Reserve is now under pressure. Will it raise interest rates sooner than expected? The markets are already reacting. Section 5. Bitcoin reacts. What does the future hold? Bitcoin, the largest cryptocurrency by market capitalization, is known for its volatility. It's reacting to the CPI data as expected. Bitcoin dropped 2% immediately after the CPI release, falling below the $40,000 support level. This price action reflects the uncertainty in the market. Investors are digesting the CPI data. They are assessing its implications. Is this a short-term blip, or is this the beginning of a deeper correction? The next few days will be crucial for Bitcoin. Section 6. The U.S. economy, crypto's driving force. The cryptocurrency market is global. However, it's heavily influenced by the U.S. economy. This is especially true after the events of 2020. The COVID-19 pandemic and the subsequent economic crisis created a strong correlation between crypto and traditional markets. The Federal Reserve's actions, U.S. economic data, and even the words of U.S. politicians can move crypto prices. This interconnectedness requires crypto investors to stay informed about U.S. economic developments. Section 7. Mainstream adoption, a catalyst for change. Despite the market volatility, there's excitement in the air. A major development is pushing crypto towards mainstream adoption. This news is a game changer. It has the potential to onboard millions of new users to crypto. It also legitimizes the industry. This is a major step forward for the entire crypto space. Section 8. Cathie Wood's take optimism in the air. Cathie Wood, the CEO of ARK Invest and a prominent voice in the investment world, is bullish on crypto. She believes this recent development is a major catalyst. She said, "This is a watershed moment for crypto. We believe it will accelerate mass adoption and drive significant innovation in the space." Her optimism is shared by many in the crypto community. They see a bright future for the industry. They believe that the recent development will pave the way for greater adoption, innovation, and growth. Section 9. Looking ahead. What's next for crypto? The crypto market is at a crossroads. The CPI data has injected uncertainty. Inflationary pressures persist. The Federal Reserve's next move is crucial. Will it raise interest rates, or will it wait? However, the recent news about mainstream adoption provides a glimmer of hope. It has the potential to offset the macroeconomic headwinds. The crypto market is known for its resilience. It has weathered storms before. The next few months will be crucial. They will determine whether the bulls or the bears win. Coinbase, the popular cryptocurrency exchange, achieved a historic milestone. On May 19, 2025, it will be included in the prestigious S&P 500 index. This marks the first time a crypto-native company has joined this elite group. The S&P 500 represents the 500 largest companies listed on U.S. stock exchanges. Inclusion in the index is a significant indicator of a company's financial health and overall market impact. For Coinbase, this achievement is a testament to its remarkable growth and the growing influence of the cryptocurrency industry. Coinbase's entry into the S&P 500 is a watershed moment for the cryptocurrency market. It signals increasing acceptance of digital assets by traditional financial institutions. This event has the potential to reshape the financial landscape. Coinbase's inclusion in the S&P 500 is a clear sign that cryptocurrency is moving into the mainstream. For years, digital assets were viewed with skepticism by many traditional investors. They were seen as volatile, risky, and even illegitimate. However, the tide has turned. Institutional investors, including hedge funds and asset management firms, have started to invest in cryptocurrencies. The technology underlying crypto, blockchain, is also gaining traction in various industries. This move by the S&P 500 further legitimizes cryptocurrency. It acknowledges the industry's growing importance in the global economy. This recognition is likely to attract more investors. Coinbase's addition to the S&P 500 came at the expense of Discover Financial Services. Discover, a credit card company, was removed from the index to make room for Coinbase. This replacement is symbolic of a broader shift in the financial industry. Traditional financial institutions are facing increasing competition from fintech companies like Coinbase. These new players are leveraging technology to offer innovative and often more accessible financial services. The replacement of Discover by Coinbase in the S&P 500 highlights the evolving landscape of finance. It suggests that digital assets and the companies driving their adoption are becoming increasingly influential. Brian Armstrong, CEO of Coinbase, expressed his excitement about the S&P 500 inclusion. He tweeted, "Coinbase to join the S&P 500, a watershed moment for crypto and our mission to create an open financial system for the world." Cathie Wood, CEO of ARK Invest and a prominent voice in the investment world, also praised the move. She noted that index-bound managers who previously couldn't invest in Coinbase would now be compelled to evaluate the company. These reactions from industry leaders reflect the significance of Coinbase's achievement. They see it as a validation of their belief in the transformative potential of cryptocurrency. Section 5. Market Response and Bitcoin's Bullish Signals. The news of Coinbase's S&P 500 inclusion was met with positive sentiment in the cryptocurrency market. Bitcoin, the leading cryptocurrency, saw its price surge. The Relative Strength Index, or RSI for Bitcoin, a momentum indicator, reached 69, a bullish signal suggesting further price increases. This positive market reaction indicates that investors view Coinbase's inclusion as a catalyst for further growth in the cryptocurrency market. It strengthens the perception of digital assets as a viable investment class. The market's response, coupled with Bitcoin's bullish signals, suggests that this event could mark the beginning of a new bull run for cryptocurrencies. Section 6. Macroeconomic Factors at Play: CPI Data and Recession Fears. While Coinbase's S&P 500 inclusion is a major development, it's important to consider the broader macroeconomic context. The global economy is facing several challenges, including inflation and potential recession. The Consumer Price Index, or CPI data, a key measure of inflation, is closely watched by investors. A higher-than-expected CPI could reignite fears of stagflation, potentially impacting the cryptocurrency market. Despite these macroeconomic uncertainties, the cryptocurrency market has shown resilience. Investors are increasingly viewing digital assets as a hedge against inflation and economic instability. Section 7. Coinbase Q1 FY25 Performance, a snapshot of growth. Coinbase's strong financial performance in recent quarters further supports its inclusion in the S&P 500. In the first quarter of fiscal year 2025, the company reported a net profit of 24 cents per share on revenues of $2.03 billion. Coinbase also recorded significant net gains on crypto assets held for investment, demonstrating the company's ability to capitalize on the growth of the cryptocurrency market. Its current market cap stands at an impressive $52.78 billion. These figures highlight Coinbase's strong financial footing and its position as a leader in the cryptocurrency industry. Section 8. Institutional Acceptance, a New Era for Digital Assets. Coinbase's inclusion in the S&P 500 is a clear signal of growing institutional acceptance of digital assets. This acceptance is being driven by several factors, including the maturation of the cryptocurrency market, the emergence of regulatory clarity, and the increasing availability of institutional-grade custody solutions. As more institutional investors enter the market, they bring with them significant capital and expertise. This influx of institutional money is likely to fuel further innovation and growth in the cryptocurrency space. The increasing institutionalization of the cryptocurrency market is a positive development for the long-term health and sustainability of the industry. Section 9. The future of crypto. Coinbase's inclusion as a catalyst. Coinbase's historic inclusion in the S&P 500 is a watershed moment for the cryptocurrency industry. It marks a significant step towards mainstream adoption and legitimizes digital assets as a viable investment class. This event is likely to have a ripple effect throughout the financial world, encouraging more institutional investors to consider cryptocurrencies. It could also pave the way for other crypto-native companies to gain recognition from traditional financial institutions. As the cryptocurrency industry continues to evolve and mature, Coinbase's inclusion in the S&P 500 serves as a powerful catalyst for future growth and innovation. It represents a significant step towards a future where digital assets play an increasingly important role in the global economy.